Developed by Mark Chaikin, the accumulation distribution line is a volume-based indicator designed to measure the cumulative flow of money into and out of a security. Chaikin originally referred to the indicator as the cumulative money flow line. As with cumulative indicators, the accumulation distribution line is a running total of each period's money flow volume. First, a multiplier is calculated based on the relationship of the close to the high-low range. Second, the money flow multiplier is multiplied by the period's volume to come up with a money flow volume. A running total of the money flow volume forms the accumulation distribution line. Chartists can use this indicator to affirm a security's underlying trend or anticipate reversals when the indicator diverges from the security price. The accumulation distribution line is a cumulative measure of each period's volume flow or money flow. A high positive multiplier combined with high volume shows strong buying pressure that pushes the indicator higher. Conversely, a low negative number combined with high volume reflects strong selling pressure that pushes the indicator lower. Money flow volume accumulates to form a line that either confirms or contradicts the underlying price trend. In this regard, the indicator is used to either reinforce the underlying trend or cast doubts on its sustainability. An uptrend in prices with a downtrend in the accumulation distribution line suggests underlying selling pressure, distribution, that could foreshadow a bearish reversal on the price chart. A downtrend in prices with an uptrend in the accumulation distribution line indicate underlying buying pressure, accumulation, that could foreshadow a bullish reversal in prices. The accumulation distribution line and on-balance volume, OBV, are cumulative volume-based indicators that sometimes move in opposite directions because their basic formulas are different. Joe Granville developed on-balance volume, OBV, as a cumulative measure of positive and negative volume flow. OBV adds a period's total volume when the close is up and subtracts it when the close is down. A cumulative total of this positive and negative volume flow forms the OBV line. This line can then be compared with the price chart of the underlying security to look for divergences or confirmation. Chaikin took a different approach by completely ignoring the change from one period to the next. Instead, the accumulation distribution line focuses on the level of the close relative to the high-low range for a given period, day, week, month. A security could gap down and close significantly lower, but the accumulation distribution line would rise if the close were above the midpoint of the high-low range. The chart on the screen shows Clorox, CLX, with a big gap down and a close near the top of the day's high-low range. OBV moved sharply lower because the close was below the prior close. The accumulation distribution line moved higher because the close was near the high of the day. Trend confirmation is a pretty straightforward concept. An uptrend in the accumulation distribution line reinforces an uptrend on the price chart and vice versa. The chart on the screen shows Freeport-McMoRan, FCX, and the accumulation distribution line advancing in February to March, declining from April to June and then advancing from July to January. The accumulation distribution line confirmed each of these price trends. Bullish and bearish divergences are where it starts getting interesting. A bullish divergence forms when price moves to new lows, but the accumulation distribution line does not confirm these lows and moves higher. A rising accumulation distribution line shows, well, accumulation. Think of this as basically stealth buying pressure. Based on the theory that volume precedes price, chartists should be on alert for a bullish reversal on the price chart. The chart on the screen shows Nordstrom, JWN, with the accumulation distribution line. Notice how it is easy to compare price action when the indicator is placed behind the price plot. The indicator, pink, and the price trend moved in unison from February to June. Signs of accumulation emerged as the indicator bottomed in early July and started moving higher. JWN moved to a new low in late August. Even though the indicator showed signs of buying pressure, it was important to wait for a bullish catalyst or confirmation on the price chart. This catalyst came as the stock gapped up and surged on big volume. A bearish divergence forms when price moves to new highs, but the accumulation distribution line does not confirm and moves lower. This shows distribution or underlying selling pressure that can foreshadow a bearish reversal on the price chart. The chart on the screen shows Southwest Airlines, LOVE, with the accumulation distribution line peaking 2 months ahead of prices. The indicator not only peaked, but it also moved lower in March and April, which reflected some selling pressure. LOVE confirmed weakness with a support break on the price chart, and RSI moved below 40 shortly afterward. RSI often trades in bull zones, 40 to 80, and bear zones, 20 to 60. RSI held in the bull zone until early May and then moved into a bear zone.